Hello and welcome back to the channel. I'm Algabot, your guide to the world of automated trading on MetaTrader 5. Today we're breaking down a pure price action strategy called Wick Rejection Reversal. This expert advisor doesn't use a single indicator. Instead, it reads the raw shape of a candle to spot the exact moment a market push fails and snaps back. By the end of this video, you'll understand how it hunts for hammer and shooting star reversals at the edges of a price range, how it places its stops and targets, and how to tune every setting. This is educational content, so let's dive in. Let's start with the big picture. Wick Rejection Reversal is a counter-trend swing strategy that trades a single, very recognizable candle pattern, the pin bar. A pin bar is a candle with one long wick and a small body. That long wick is the market's clearest fingerprint of a failed push. Price probes a level, gets violently rejected, and snaps back before the candle closes. When that happens at the right place, it often signals a short-term reversal. What makes this strategy strict is location. It doesn't act on just any pin bar. It only acts when the rejection happens at an extreme of the recent range. A hammer, with a long lower wick, must tag the lowest low of the lookback window. That tells us sellers tried to push lower and were rejected, so the strategy looks to go long. A shooting star, with a long upper wick, must tag the highest high of the window. That tells us buyers were rejected, so the strategy looks to go short. Importantly, there are no indicators anywhere in this logic. There is no moving average, no relative strength index, no stochastic. Every threshold is simple geometry of the raw candle, the size of its wick, the size of its body, where it closed, and its position inside a raw swing window. That makes the behavior very transparent and easy to reason about. This expert advisor was designed with the British pound versus the US dollar and with gold in mind, running on the 1-hour chart. That said, the logic works on any liquid symbol and time frame you choose. The style is mean reversion, fading exhaustion at the edges of a range, rather than chasing momentum. Who is it suited for in an educational sense? Traders who like clean, rules-based price action, who prefer counter-trend setups, and who want a strategy whose every decision can be explained by the shape of one candle. As always, this is for learning, not a profit promise. Let's walk through the exact logic, step by step. The strategy works on closed candles, so it acts only once per freshly completed bar, and only when there is no position already open. This keeps it patient and avoids stacking trades. When a new bar opens, the strategy examines the candle that just closed. It measures 4 things from raw price: the total range from high to low, the body, the upper wick, and the lower wick. First, it checks that the body is small, no larger than the body ratio multiplied by the range. A small body means indecision, which is exactly what we want in a rejection candle. Now the strategy detects direction. For a bullish hammer that signals a long, for conditions must all be true. The lower wick must be at least the wick ratio times the range, meaning the wick clearly dominates the candle. The upper wick must be no larger than the body, so there's little overhead supply. The close must land in the upper third of the candle, showing price finish strong. And finally, the candle's low must tag, or undercut, the lowest low of the lookback window. That is the rejection happening right at support. For a bearish shooting star that signals a short, the strategy detects the exact mirror image. The upper wick dominates. The lower wick is no larger than the body. The close lands in the lower third, and the candle's high must tag or exceed the highest high of the window. That is rejection right at resistance. When a long signals, the entry is taken at the current ask price. The stop loss is placed just below the hammer's low, pushed a little further by a buffer fraction of the candle's range. The risk is the distance from entry to that stop. The take profit is then set at the entry plus the risk reward multiple times that risk. A short mirrors this perfectly. Entry at the bid, stop just above the shooting star's high plus the buffer, and target the same risk reward multiple below entry. Because the stop sits beyond the wick, it rests exactly where the trade idea would be proven wrong. Let's follow the action on the chart, using the pound against the dollar. Notice the 2 reference lines drawn from raw price. The green line traces the lowest low of the lookback window, our support, and the red line traces the highest high, our resistance. These are not indicators, just the edges of the recent range. Watch the first 4 candles drift lower and press into that green support line. Then the fifth candle is our hammer. It stabs below support with a long lower wick, but buyers slam price back up and it closes near the top of the candle on a small body. That is rejection at the window low. The strategy detects the hammer and a buy entry triggers near 1.2702. The stop loss sits just beneath the wick around 1.2676, where the idea would be invalidated. From their price rallies, candle by candle, until it reaches the take profit near 1.2754. The first trade is complete. Now watch price keep climbing toward the upper part of the chart, pushing into the red resistance line. The 11th candle is our shooting star. It spikes above resistance with a long upper wick, but sellers reject the move and it closes near its low. That is rejection at the window high. The strategy detects the shooting star and a sell entry triggers near 1.2757, with the stop loss placed just above the wick, around 1.2784. Price then rolls over and slides down to the take profit near 1.2703. The second trade is complete. Notice how each entry sat exactly where a wick was rejected at a range extreme, and each stop hid just beyond that wick. Remember, this is an illustration for educational purposes only. Let's go through the inputs you can adjust and how to think about each one. The first is lots, defaulting to 0.10. This is the fixed trade size in lots. Keep it modest relative to your account, because this strategy uses a fixed size rather than scaling to risk. Next is Lookback, defaulting to 20 bars. This sets how many candles define the swing window whose high and low must be tagged. A larger Lookback demands a more significant extreme, so signals become rarer but arguably more meaningful. A smaller Lookback produces more frequent, but less selective, setups. Then comes Wick Ratio, defaulting to 0.60. This is the minimum share of the candle that the rejection wick must occupy. Raise it toward 0.85 to demand a more dramatic, dominant wick. Lower it toward 0.40 to accept gentler rejections and trade more often. Body ratio, defaulting to 0.30, is the opposite control. It caps how large the body may be as a share of the range. A smaller value insists on a tiny, indecisive body, which is the classic pin bar look. A larger value is more forgiving. RiskReward, defaulting to 2.0, sets your target relative to your stop. At 2, the take profit sits twice as far away as the stop. Increase it for bigger targets that are hit less often, or reduce it toward 1 for closer, more frequently reached targets. Finally, buffer frac, defaulting to 0.15, adds a cushion beyond the wick when placing the stop. This gives the trade a little breathing room, so a minor spike doesn't stop you out prematurely. Tune these together and always test changes before using them. And that brings us to the end of our breakdown of Wick Rejection Reversal. We covered how this pure price action strategy reads the shape of a single candle, how it only trades hammers and shooting stars rejected at the extremes of a range, how it places its stops just beyond the wick, and how each parameter shapes its behavior. Remember, everything here is educational content only, and nothing in this video is financial advice. If you found this helpful, please give the video a like, subscribe for more MetaTrader 5 strategy analyses, and drop a comment telling me which strategy you'd like me to cover next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.